Okay, thank you. Hello, everybody. My name is Denny. I am a QuickBooks ProAdvisor, and I've been with Hawkins Ash for almost 10 years now. And I've been in public accounting for almost 20. So I've got a lot of experience with QuickBooks, and I've been on both sides of the desk, meaning I've been in business. My husband owned a business, and so I was his bookkeeper along with being the bookkeeper of my many clients. So I have years of experience on both sides of the desk. What we're going to be working with today, I'm going to show my screen now. I hope you can all see that. I'm going to be working with QuickBooks. I am actually working in a Premier version of QuickBooks right now, and it's a little bit different than the regular QuickBooks Pro, and I'm just going to point out a couple little things as we're going along that the Premier edition has that the Pro edition does not, just in case that's something that you might need. The Premier edition is not that much more expensive than the Pro edition, so just something to keep in mind. I am using the Rockcastle Construction sample company file, and everybody has access to those sample companies in QuickBooks. So if you need to play around in QuickBooks, when you go to open a QuickBooks company file, there's an option to open sample companies. And you can always go into a sample company and play around if you're not really sure what you're doing is going to have, what kind of effect that it's going to have on your financial statements. You could play around in a sample company. So we're going to start off on some of the ways to navigate around QuickBooks and some of the different views. You have a view window, and it lets you do different things. You can set up a top icon bar. You can hide the icon bar if you don't like it, or put in the top icon bar. A lot of different views. I'm just going to leave the left icon bar open right now. Also, you can work on one window or multiple windows. I like multiple windows. I always tend to have a lot of windows open. That's just my way of working in QuickBooks. Also, under the company menu, there is a company snapshot. And this company snapshot gives you a lot of information, and you can actually customize this page. But from this page, you can actually double click on a field and get the information on that field. So just another way to go deeper into QuickBooks. Also, if you click on window on the top menu bar, it'll show you what windows are open. So right now I've got the home window open. I've got the audit trail open. So you can always toggle between these windows by clicking on the window. Another way to toggle is on the left icon bar. There is open windows. And here you can also toggle between the different windows. A field that is really nice in QuickBooks is under the Help menu or the Search menu. You can actually get a lot of information about QuickBooks. The QuickBooks Desktop Help, find training, find a local QuickBooks Desktop expert. That'll bring you to QuickBooks homepage where you can get my information. It gives you the information about the Certified ProAdvisors in QuickBooks. It also gives you a year-end guide. It gives you any additional add-ons that you might think about buying, an app center, and a lot of information about QuickBooks. That's going to give you your license number. So on the left icon bar, we'll take a look at that again. On the left icon bar, you have different navigations. So under My Shortcuts, these are things that you can add. If you want to add a new shortcut, you can just customize. If you want to delete a shortcut, you can do that too. If I want to delete my services shortcut, delete add payroll, you can delete things and add things. So if I am in, say, my check register, and I want to add that, I can go into View and add it to the icon bar. or I can go on customize shortcuts and I can add different things here. And you can pick whichever picture you want for that shortcut, and it'll add it on the left icon bar. View balances. Cancel out of these windows. Under view balances, here's where you can choose checking accounts, any type of balance sheet account, income statement account, and customize those balances so you can add different accounts to this window. And that's view balances. Then there's run favorite reports. You can customize reports to show up in this window. And you can also add your memorized reports. So if there's a report that you like to run all the time, you can have it stored in the left window pane and have it sitting there for easy access. And then open windows. Again, you can toggle between open windows. So to start with, we're going to look a little bit about preferences. When you initially set up a QuickBooks company file, what happens is they walk you through an easy step interview. And we're not going to go through that because that could take the full 3-hour webinar because there's a lot of information there. Well, once you've gone through that easy step interview, what happens is you can't get back into it and go back to different things. So if you thought that, oh, I checked this in the easy step interview and I want to change it, everything you set up in that easy step interview is available under Edit, Preferences. And I'm sorry if I'm going a little quickly, but there's a lot of information we're going to be covering today, and I want to make sure we get it all in. So under Edit Preferences, we're going to highlight a couple of the main preferences. So under the General Preference, the one thing I always do is I turn off pop-up messages for products and services. That way, when you're working in QuickBooks, you're not getting a bunch of pop-up commercials. Another thing is I personally don't like the beeping when recording a transaction, so I'll turn that off. If you like the beeping, you can leave that on. Another thing is under Company Preferences, under General. Under Company Preferences, here's how you see your time. So if you're using payroll or using timesheets, this is how you decide if you're showing it as decimal, as 1.5 for an hour and a half, or minutes, 1:30 for an hour and a half. Excuse me. So that's how you can determine that. The difference between my preference and company preferences is if you have a multi-user environment, company preferences can only be set by the administrator, where my preferences can be set by each individual user. Some other preferences is in the accounting preferences. Here's where you can turn on account numbers. That will give you the extra field for the account numbers. And here's where you can turn on class tracking. And what class tracking is if you have different divisions or different locations, want to separate your profit and loss statement by different categories, here's where you can turn on class tracking. And what that does, it'll allow you to run your profit and loss based on classes. So when you're filling out your forms, there's additional fields for classes. This is also where you can set a closing date and password. We suggest you do that at the end of each year. Once you've gotten your tax return and adjusting journal entries back from your accountant, we often suggest setting that closing date. So that way, when you go back into QuickBooks, if you're like me and keep using the prior year, QuickBooks will warn you that you're not in the current year, and are you sure you want to do that? Let's see, some of the other preferences are under the desktop view. Under my preferences, here's where you can change your color scheme. So if I don't like blue and I like, say, pink, I can change my color scheme to pink. Or maybe purple red, you can change your color scheme. QuickBooks came out a couple years ago with a new version, and they took away the color scheme, and it's one of the biggest complaints they've ever had. So they ended up having to go back in and do a maintenance release to change and put the color scheme back in, because it was just black and it was boring and people didn't like it. So they added that. Under company preferences, under desktop view, here's where you can turn on and off different items. So if I'm not using time tracking, or if I'm not using payroll or inventory, this will let me turn these features off where my sales orders won't show up on my desktop view. And sales orders is one of the items that is available in the Premier Edition, just to let you know that. So I've turned that off, and it brings me down to the company preference for sales orders. So there's a lot of information in the different preferences. So go down and take a look at some of these. Another one is sales tax. Here's where you turn on or off your sales tax preference. And the other one is taxes and 1099s. If you file 1099 miscellaneous forms, here's where you would turn that on. And we'll talk a little bit about those in a little while. And then time and expenses. If you're tracking time and what day of the work week you start tracking time. So when you're in the time sheet calendar, Monday will be your first date of the week. So now we're going to talk a little bit about the different navigation windows. And we're going to start in the navigation window for the company. And the company is going to start with our chart of accounts. And when you're setting up a chart of accounts in QuickBooks, there's a lot of different ways to add accounts. You can add them right through this chart of account window, or you can add them on the fly when you're in a transaction, or you can right-click in this window and then go to New, or you can click on Account and go to New. So if I add a new account, let's see, I'm going to add an expense account for advertising. This is actually the only field you have to fill out is the account name. But if you are using account numbers, here's where you can put in an account number. And I'm going to save that account. And now it's going to put it in my expense accounts as advertising expense. If I want to move my accounts around, say I want to be in alphabetical order and I want to move advertising expense up here, I can just click on the little diamond that's on the left side of the account, left click and drag it. And it'll move it for me. And it also moves that order on your financial statements. If I have a sub-account, for like my automobile expense, you can see I've got 3 different sub-accounts. It just breaks it out a little more for me. The only difference on those accounts is I'm going to edit that account, and it's just you check the box that you want it to be a sub-account of the expense. One thing to make sure of is it has to be the same account type as the main account. So if I were going to try to add a new sub-account, it's got to be an expense account because my main account, automobile expense, is an expense account. If you're not sure what type of account to make, when you're setting up the different account types, you need to choose a type, and this type determines on where they're going to show on the financial statements. If you're not sure, if you click on one of the account types, it gives you a little explanation of what that account type is. And then you can click on more if you need some additional information. But it'll give you a nice little summary of what type of account that this is. And if you're not sure, give your accountant a call because you could really mess up your financial statements if you've got your account types wrong. It's easy to fix it. You can change the account types pretty much at any time. But if you're looking at your financial statements and all of a sudden you see that, oh, I'm set for the year because you know, my profit and loss only shows the $5,000 income, where you might have your account types wrong and you might actually have $25,000 of income. So you want to make sure those account types are right. It helps you get a good look at your financial statements as to how you're doing for the year. Next in our company is items and services. And your items and services are things that you're selling or things that you're purchasing. And again, it's one way to get there is through the home screen. Another way to get to the item list is under list, item list in chart of accounts. You can get to the same place several different ways in QuickBooks. So if I'm going there one way and you go there another way, that's fine. It's just user preference. So again, with your items, there are several different types of items. So we've got service items, inventory parts, non-inventory parts, other charges, subtotals, groupings, discounts, payments, sales tax items, and sales tax groupings. So inventory assemblies, that's one thing that is available in the Premier Edition. Just one of the things that is in Premier that's not in the QuickBooks Pro. If you are using inventory in QuickBooks, make sure you're using it properly. QuickBooks uses the average costing of inventory. So if you are using inventory, make sure that you realize that QuickBooks uses average cost. So if you buy a widget today at $1 and you buy another widget tomorrow at $2, QuickBooks is going to see that it has two widgets in its inventory, and it's going to average cost those at $1.50. Another thing you want to keep in mind with your items, I'm going to set up a new inventory item, is the taxability. So make sure you know if your items are taxable or not. I'm going to set up a new inventory item. I'm just going to call it a door. If I have a manufacturer's part number, I can add that. Unit of measures is also available in a Premier Edition of QuickBooks. What this allows you to do is maybe you're buying it by the case and selling it by the each. You can set up unit of measures that will let you do that for purchasing and selling. When you're purchasing, you can just call it, maybe say a door. Maybe when you're selling it, you want to say door 6-panel, something like that. If your cost and sales price is always going to be different for your door, you can leave these at 0, or if it's always the same or close to the same, you can set up your cost and your sales price. So next on my list of things to do here is set up a cost of goods sold and an income account. So for my doors, these are going to be job materials. And for my income account, I want those to go to materials income. So these are very important because when you're selling them and purchasing them, this is how they're going to get posted. And also when you are purchasing, you want them to go into the inventory asset account. One thing to keep in mind is if you are using inventory and setting it up, do not use the on hand and the total value. What QuickBooks does it will plug the balances into inventory and a fake account. It's a plug account in QuickBooks called opening balance equity. Depending on what transaction you're in, QuickBooks puts the other half to a plug account. So what QuickBooks technically wants you to do is using the forms, not using the item setups, but using the forms to enter your beginning balances. So if I'm setting up a new vendor, it'll also ask me for a beginning balance. If I'm setting up a new customer, it can ask me for a new balance or a beginning balance. Don't ever put something in that way because it's going to mess up with your books. And I'll show you that in a second. With your items, you also have custom fields. And with items, QuickBooks allows you up to 5 custom fields that you can specify for this item or for all of your items, because the custom field is across the board and it applies to all the items. So if you want custom fields for the door, I can define them up to 5, and I can have these actually show up on an invoice or in reports. Under notes, I can add a note for that item. So I'm just going to say okay, and I'm going to save this item. So here's my new door. It's on my list. And again, I want to make sure that I know the taxability, if it's taxable or not. We're going to talk about sales tax later. I'm not sure how many of you are in Wisconsin and how many of you are in Minnesota, but I am in Brown County, Wisconsin, and we're going to be adding a 0.5% sales tax as of January 1st. So we'll come back to set that up in our item list a little bit later in the sales tax items. We're going to talk a little bit about purchase orders. And this is on slide number 11. And a purchase order is a document that you can send to your vendor or supplier that states that you're planning on purchasing products or services from them. So when you fill out a purchase order, let's say I'm just going to order some of those 6-panel doors, and I'm going to order them from Custom Kitchens. I can go through and, again, here's my classes. So these I can set up to be whatever I want them to be. So if I'm got different locations, I might have a class for Green Bay and one for Rochester and one for La Crosse, some of our different offices here at Hawkins Ash. And again, classes you can set up under your lists, under your class list. So if I'm tracking classes, here's where I can do that. And so here's where I'm going to order my 6-panel doors. And let's say I've called the company and I want 7 of them, and they gave me a quote of $100 a piece. If I'm ordering these for a specific customer, I can say, okay, these are for Christie's job. And again, here's where the unit of measure would come into place. And now I'm just going to randomly pick some things to go with my door. So I'm randomly finding some things. To put on my purchase order. So I'm telling my vendor that these are what I want them to send me. Purchase orders do not post. So when I prepare a purchase order, it's not going to hit my financial statements at all. We're going to talk about setting up vendors next. So from our purchase order, we can receive inventory and receive bills against inventory. Well, I'm going to actually kind of hop down here to enter bills. So entering bills is similar, or it coincides and ties into purchase orders. So if I go to Custom Kitchens of Bayshore, QuickBooks is going to know that there are open purchase orders. So if I get a bill from Custom Kitchens of Bayshore and type them in to enter that bill, it's going to say, hey, you've got purchase orders. Do I want to receive against that purchase order? I can say no, but if I do want to get that receive against the purchase orders, I can say yes. Right now I'm going to say no, and I'm going to show you the difference between receiving the inventory or entering the bills against inventory. The only difference is if I receive the inventory, I can receive inventory, sorry, my mouse is a little getting carried away. I can receive the inventory with a bill or without a bill. So if I receive the inventory without a bill, the only difference is this item receipt, but this box is checked. One way or another, if you're receiving just the inventory as an item receipt and then you get the bill later, it still posts to your accounts payable, even if it's just an item receipt. And you can enter the bills against inventory by bringing up your vendors. So I'm just going to enter a bill right now. And I'm going to enter a bill for custom kitchens. And I'm going to enter this bill against the purchase order. So what I'm going to do is, let's say I had some doors that were back ordered and I only got 5 out of the 7. And let's say I only got 10 hinges and I got all my trim. And let's say this is all for Christy's job for her family room. What I'm doing with the customer job is I'm actually doing job costing. So my reference number, this is going to be my invoice number from my vendor. And again, if I'm using classes, I can fill in those classes. So I'm just going to enter this bill. I'm going to do save and new. I have a credit limit that says my credit limit is $5,000 and it's over $5,000. Do I want to continue? I can say yes. Okay, so now let's say I'm going to enter another bill, and I'm going to enter a bill for Hawkins Ash. Well, Hawkins Ash is not a vendor in my list. So what I'm going to do is I'm going to either quick add them or set them up. And here's where I can add things on the fly. So I'm going to set up Hawkins Ash. And again, it asks me for this opening balance. Do not enter an opening balance. Because again, the first rule of accounting is debits have to equal credits. And if you're putting an opening balance in a bill, what it's doing is it's doing a credit to accounts payable. And it has to put that debit somewhere. And it's going to put that into a plug account. So here's where I can put my company name. And I can copy and paste by just highlighting, do a Control-C, and pasting, doing Control-V. I can put in my address. And here's phone number and other contact information, and you're not limited to what is showing up on this screen. You can toggle and you choose all these different options for your contact information. Payment settings. If the vendor has an account number for you, you can put that in. The payment terms, say net 30. Here's where a credit limit would come into play. And if you've got a billing rate level. Tax settings, again, here's 1099. Here's where you would say to the system that the vendor is eligible for a 1099. 1099s are issued to subcontractors or people that do services for you, your landlord that charges you rent, anybody that you pay over $500 to in a year that is not incorporated and that is providing a service to you. So they would get a 1099, and you can put in what you're going to do is issue them a W-9, and we talk more about this in the payroll seminar. So I'm going to say I got a 1099, and I'm putting in my vendor ID number because Hawkins Ash provides a service to me. Now it's going to ask me for some different accounts I want pre-filled. So for Hawkins Ash, they're going to be providing me with accounting fees. So that's what I want to pre-fill whenever I use Hawkins Ash. And additional information, I can type my vendors. And again, these can be whatever you want them to be, and they can be used in reports. We'll say I'm a consultant. And here we have custom fields that are available for your vendors, customers, and employees. You have up to 7 custom fields that you can set up for these names. So I can have 7 custom fields for customers, vendors, and employees. And again, these custom fields can be used on forms and in reports. So I'm just going to set up a custom field called test. I'm going to say I'm going to use that for customers, vendors, and employees. Click OK. And now it has this test field that I have available to use. In the payment settings, I wanted to point out one other thing, print name on check as. So what QuickBooks does is it only allows you to have one name per list. So if Hawkins Ash CPAs is also a customer of mine and a vendor, what I might do is set them up with a /V to show that they're a vendor. And then I don't want the /V to show up on the check, so I can print the name on the check as Hawkins Ash CPAs LLP, and that'll differentiate it on my check from the /V vendor. So then I can have it set up as a customer and vendor. Click OK, and here's where I can put in my invoice number for my bill, the amount due, and in my expenses, you can see because I pre-filled that in my vendor setup, I can say accounting, it automatically populates, and I can put in a memo. Okay, as I was talking about those plug accounts, I just wanted to show you something in the chart of accounts. If you have a balance in this account called opening balance equity, that means that you've set something up as one half of the transaction and not the other half. So if you have something set up in opening balance equity, you're going to want to take a look and see what's in there and maybe work with your accountant or give us a call. We can also help you work through reclassifying those items into the proper accounts. Another thing when I'm entering bills, I'm going to go back. Oh, let's look at our custom kitchens of Bayshore. When I'm opening bill, or when I'm entering a bill, I can see on the right-hand side of my screen, I have this option on the right-hand side to see my different transactions. So if I think that maybe this has already been entered, I can look over here and see if there's a bill for that same amount, or I can see the transaction history. I can always click on the button to run a quick report and get more information. And then I also have contact information, or here I can click on transactions and get the different related transactions for this item. If I don't want to see this screen, I can just click on the arrow to hide the history and click on it back to get it back. Same with my left menu bar. If I don't like to see that, I can always hide it and get more screen space. Okay. Next, we're going to look at slide number 19 and go into our vendor list. So in our vendor list, it gives us all of our vendor names, the balance that we owe them, and the attached column, that's if you want to attach a document. Maybe you're looking at going paperless. If I click on the attach, if I maybe scan in my bill, I can go right from the scanner and scan it into QuickBooks, or I can go into my computer and save that bill into a separate file. Or I can scan it into a document center through QuickBooks. So those are nice features to have if you want to go paperless, because then you can just click on the attachment and you can find your original documents. You can change the order that you're seeing your vendors in. If I want to see all the vendors that have balances, I can click on my balance total. If I want to see all my inactive vendors, I can go to all vendors and it'll show me any vendor that's inactive. Any inactive vendors will have an X next to them. So if one of your vendors, say, went out of business or they changed their name and we need to use a new name, but we want to keep the history for the old name, you can make the old name inactive and set up the new name. And another way to make the vendors inactive is if you double click on the vendor to edit it, and there's a box to make it inactive right here. Or you can right click on the vendor and make the vendor inactive. Again, different ways to get to the same thing. So in my transactions, I show right now all the different history that's here for my vendor. And I can sort my vendor history. Let's say I want to see all the vendor history. And it'll show me all the vendor history. If you're not seeing all this information, that just means that you need to click the arrow. If you don't need to see that information, you can you can hide the details, or if you want to show the details, you can. With the vendors, you can set up different contacts. You can set up to-dos. You can set up notes, and you can see the email that has been sent through QuickBooks. So if I want to set up a to-do or a note, let's say I'm going to set up a new note for my vendor. I'm going to manage notes and add new. And here I'm going to say Bayshore Water, make sure quarterly bill comes in. Maybe I didn't receive it last quarter. Okay, and so I'm going to set up a note, but then what I can also do is set up a to-do. And what a to-do does is it tells you what to do. I'm going to do a task for Bayshore Water, and I'm going to say at the end of December, or at maybe mid-January, I want the system to remind me did I get water bill? Click OK. And now that's going to be in my to-dos once I save and save. And what are to-dos? Well, in your company file, you can set up your reminder list. And here's everything in my reminder list. And what you can do in your preferences, under Edit Preferences, under Reminders, is show your reminder list each time you come into QuickBooks when you're opening your QuickBooks company file. And that'll give you your reminders and things that are due for the day. So in my to-do notes, I have one to do. I'm going to say, did I get water bill? If I've got money to deposit, purchase orders to print, anything to print, to-do notes for today, or inventory to reorder based on your reorder point. So things like that, it'll set up. You can also set preferences here, is where you can get to the reminders. And under the company preferences, here's different things that you can set in your reminder window. Okay, so that's my reminders. Reminders are nice for employees. Maybe you need to give raises or do a performance evaluation. You can set up to-dos for those also. So here's my note from my vendor. Next, I'm going to talk about credits. So credits are if you are maybe returning something from a vendor. So say I returned some of those doors that I bought from Custom Kitchens. I'm going to bring up my door, and I'm going to say I returned one of them for Christy's job. And maybe I have a credit memo number from my vendor. That's where I would set my credit. It's just clicking the radio button. So when you go to pay your bills, and this is on page 20, slide 21, here's where it's going to show your bills. You can pick and choose your bills. You can show different things. If I want to show bills due on or before a specific date, I can do that, or I can show all bills. I can filter by if I only want to see one vendor. I just want to pay my CU electric bills. I can filter it. Or I can sort by due date, by discount date, if you've got vendors that offer you a discount. So right now I'm going to sort by discount date, and I'm going to see that I can take a discount from Timberloft Lumber. So I pay my bill by 11/30. And what QuickBooks is going to do is it knows the date. So it knows I don't have that available. So it's going to suggest 0 discount for that one. Let's look at this one. This one, I'm within the discount date, and it's going to say, okay, this is your suggested discount. I can set my discount. Maybe I'm going to set up a discount account. I'm just going to set that up as an expense account. And if I have a class associated with that. So that's where I set my discounts. And QuickBooks knows only to pay $113.85. And so I'm going to pay Timberloft Lumber, and what it's going to do is, because I'm paying 3 different separate invoices, QuickBooks knows it's the same vendor, so it's going to print on one check. And it's going to list the different reference numbers on the voucher. And let's say now I'm going to pay a bill for Custom Kitchens of Bayshore. Well, because I entered a credit, QuickBooks sees down below that I have a credit available because I returned one of those doors. I'm going to set my credit, and I'm going to use that against this invoice. Click Done. And now QuickBooks is going to pay $100 less than the bill amount. If you have a lot of different bills you pay for one vendor, QuickBooks also has a bill payment stub, because normally what will happen is if you're using the 3-part checks where it has the check on top and 2 vouchers, QuickBooks will print the invoice number on the voucher. But if you have a lot of invoices that you're paying with one check, they might not all fit on that voucher. So if you go into File, Print Forms, you have a bill payment stub available that you can print. And let's just say I'm going to look at Timberloft Lumber, and I'm just going to preview the bill payment stub, and it's going to list those different bills that I'm paying with that check to let you know that's available. Another thing is how you're paying. So the payment down below, this is the date that it's going to print on the checks. How you're paying it. If you want, you can pay your bills via credit card. If you've got a credit card set up in QuickBooks, you can say, okay, I'm going to pay it by this credit card. And QuickBooks will move the balance then from accounts payable to your credit card account. So I'm going to say, okay, I'm going to pay by check, and I want it to be printed, and I'm going to pay the bills. If you're handwriting your checks, you can click to assign the check number. So I'm going to pay my bills, and here's the checks it's going to print. I can print checks right here, put in my first check number, click OK, and then it's going to ask me where I want to print it. And again, there's 3 different check styles. The majority of clients that I work with use the voucher. You can add a logo to the check, a signature. So there's different things you can do with your checks. You can change the fonts, partial page. So you know that's in the print options. I'm going to just cancel out of there. And we're pretty much done with the top portion of the navigation window. Just a couple things I want to point out is under order checks, you can order your checks from QuickBooks, but they're rather expensive. So what I would suggest doing if you are using QuickBooks checks is to use your local printing company. Most times they can get checks that work with QuickBooks. It's just the check on the top and the 2 vouchers. Also, here's where it lets us use inventory activities when I want to adjust my quantity and value on hand. And again, this is the way you want to enter your beginning inventory. And QuickBooks also has a calendar. And in the calendar, you're going to see your to-do notes, things like that, and things that have been done in QuickBooks. So that's a newer option that they've added within the last few years. Another way that you can print checks in QuickBooks is if you've entered your bills but haven't printed them through QuickBooks, you can just leave them sitting out there. A couple different ways to print them is go under File, again, Print Forms, and you can print checks. And here's all my checks that I've got out there to print, because I didn't print them before. Or you can go into the Print Checks under the Banking menu, and there they are. Next, we're going to set up and look at our customer navigation window. So under customer navigation window, sales orders I mentioned before are available with the Premier edition of QuickBooks, but we also have estimates, invoices, sales receipts. So if I create an estimate, what that's going to do is that's going to be another non-posting transaction similar to our purchase order. Same with sales orders. It's a non-posting transaction. So if I create an estimate, and let's just say I'm going to create an estimate for a new customer, Jordy Nelson. I usually use Aaron Rogers in this example, but he's hurt, so I'm going to have to use somebody healthy today. So Jordy Nelson's my new customer. I'm going to set him up as a customer. Now this is my customer setup. Again, I've got all the contact information. And I have my bill to, and I don't know where Jody lives, so I'm just going to make up an address. If I want to ship to be different than my invoice date, let's say Jody Nelson is building a cottage. And he's building a cottage up in Door County. So let's just say it's at 456 Door County Road in Fish Creek. And that is where my items are going to ship to. I can have different ship to addresses also. So here's my main information on Jordy Nelson, and he's got different contact information similar to vendor setups. Payment information, my payment terms, when he's got to pay me. Credit card information. QuickBooks does comply with the PCI standards for credit cards. So if you do keep a credit card on file in QuickBooks for your customers, QuickBooks is going to make you do some additional security. You're going to have a more complex password. You're going to have to change that password more often. If you've got a preferred payment method, if you've got a preferred delivery method, I'm going to set this to none. If you do have it set up for email, you have to make sure that you have an email address set up for your customer. If you've got a credit limit set up for that customer. Sales tax settings, make sure you know if that customer is taxable or not. If you're doing work for a nonprofit organization or a church or school, something like that, you're going to set them to non-taxable. Make sure you have a tax exemption certificate for them. Additional information, again, you can set up customer types, whatever you want them to be. And again, you have those custom fields. Here's my test field. And sales rep, if you do have sales reps, you can set up your sales rep. And you can run some reports based on that sales rep. Job information, if you are tracking different jobs, here's where you can set up some job information. The start date, projected ending date, actual ending date, and again, your job statuses. You have to come in and manually change those, and your job types can be whatever you want them to be. And again, here's your opening balance. Please don't ever fill that in. But there's where I would set up a new customer for Jordy Nelson. So I just set him up, and let's say I'm going to create an estimate for him. And right now I'm just going to kind of pick and choose a bunch of different things that I'm going to estimate. And I can change my cost rate in this estimate. I'm going to bill him $45 an hour. And let's just say I'm going to order some inventory, some doors. And I'm going to mark these doors up 50%. I can change that in the markup. The markup does not show anywhere except for on the invoice. It will not print. And some doorknobs. Sorry, I'm just getting over a little bit of a cold, so I don't mean to be coughing. And if I want the markup here to be $10, I can just change that to a dollar amount, and it'll mark it up $10. Again, when you're setting up your items, make sure you know if they're taxable or not, because that feeds into the estimates and the invoices. So that's how I would set up this job for Jordy Nelson and create an estimate. Again, the estimates are non-posting. I'm going to save that estimate. I can look at my customer list. And again, this customer information is very similar to the vendor information we looked at before. And here's Jordy Nelson, my new customer. And here's Christy that I've been working with before. And again, I have all this information on the right side of my screen. But you can see what's available in my customers that is not available with my vendors. As you can see, some of these customers have indented jobs. What those are different jobs for that customer. So if I do different jobs for my customers, I can separate them so I can see my income and expenses by job for that customer. So if I set up a new job for, say, Christy, I can go up on top to add new customer job. And once the customer is set up, I can add a job. So let's just say I'm going to add a job for Christy, and I'm going to build a garage. I just put in the job name, say OK, and then when I'm doing things for her garage, I just choose that job versus picking a family room or the kitchen or the bathroom remodel. So if I'm ordering inventory, things like that for the job, I just want to make sure I'm choosing that job when I'm going into my enter bills. So now I have a job for Christy's garage. So when I'm purchasing for Christy's job, I want to just make sure I have that in the customer job. And the difference between expenses and items are items that you're ordering for your customers or selling, but you can also job cost expenses. So if I've got freight expense of $100 for my job, I can put that in also. It's just it's not going to differentiate it between an item. So one thing with QuickBooks and the Premier editions of QuickBooks, if you're in a contracting, if you're in more of a contracting field in your business, one thing that's available in the Premier editions is you do have a construction there is a construction module, Premier Edition, that lets you do change orders, which is nice. Also available in the Premier Edition is a Retail Edition, Professional Services, Nonprofit. And what those editions do is they come canned with more specific reports for your industry. Also, it lists things a little bit differently, like for the nonprofit, you're going to see donors more than customers, things like that. It's going to have some more custom reports. So we've got an estimate out there for Jordy Nelson right now, and you can see that it's showing up here. So now what I want to do is I can create an invoice. So let's say I'm ready to do my invoice for Jordy Nelson. It's going to tell me that there's an available estimate out there. So instead of having to retype everything into the invoice, I can choose the estimate, click OK, and now I can choose what I want to do. Do I want to create the invoice on the 100% of the estimate? Maybe I'm done with the job and I'm going to bill them in full. Or if I'm 50% done with the job, or I can pick and choose. So let's just say I'm 50% done with the job, I'm going to bill them 50% of the estimate. Click OK, and it's going to do everything in half of what I put in the original estimate. Those are my ship to, bill to. So if I just want to preview my invoice, yep, there we go, preview. This is my invoice is going to look like. And I can customize this form. If I want to customize my invoice, what I want to do is go into formatting and customize the data layout. There's different tabs on the top, and I have different tabs for my purchase orders also in my bills. But what this does is it'll let me know transaction history. So once I save my invoice, let me just click save this. So in my reports, I can go to transaction history, and it says there's no payments for this invoice, because there hasn't been a payment yet. But I can look at transaction journals. This gives me the transaction journal gives me the actual debits and credits behind the scenes of this invoice. I can view open invoices for this customer, see sales by customer detail, the average days to pay based on the history of this customer. So there's a lot of different things you can do. I can run a quick report right here. Here's my estimate. Here's my invoice. So a lot of different items on top of this form. A lot of different things we can do. If this is an invoice that I want to memorize, maybe it's something that this is kind of something I do all the time, and I can memorize that. So then when I want to invoice the same thing all over again, if I memorize this, I can go into lists, memorize transaction list, and here's where it would have my invoice listed. I can mark this invoice as pending. What marking it as pending does is it unposts. Marking it as pending does not post it to my sales account. So if maybe I need to double check with the supervisor if I'm allowed to bill this yet, I can set it up to bill, mark it as non-posting, and then when my supervisor said, yep, go ahead and bill that, I can mark it as final. I can print it later and email it later. What that does is it puts it in a batch. So when I do want to print it, I can print the batch. So if I want to do a bunch of invoicing and not print one at a time, I'm going to choose print later and then print or email them all as a batch. I can attach a file. Maybe I've got a signed contract with Jordy Nelson. I can attach that. And again, that's where it comes into play where you can go paperless. We're going to look at Christie's invoice next to add time and costs. I can receive a payment right from this invoice screen, or I can issue a refund or credit. Again, I have all my history over on the right-hand side. So I'm just going to save this, and now I'm going to invoice Christy for her family room. Well, it knows I have an estimate out there for Christy. I'm going to bill on that, but now it knows I've got billable time and costs, because when I was ordering that inventory before, when I was in the purchase orders and the bills, I had assigned her name to some of those items. So I'm going to select those items, and I'm going to say, those are my items over here. Here's my 6-panel door, my hardware, and my lumber. So I'm going to say OK, and it's going to bring those items into my invoice. Again, I don't have to retype it. If I wanted to, I can change my quantity. Let's say I'm only invoicing her for 8 hinges, and it will adjust the invoice. If I want to change the dollar amount, maybe the price went up and I'm going to pass that price on to her, I can change my dollar amount. And again, QuickBooks does a great job at job costing, so I can run reports then based on my estimate versus my actual. We'll look at some reports in a little while, but that's how we can invoice based on estimates and based on the costs that we put into the system and assign to customers. Again, if we look at our customer center, we again have those customer notes and to-dos. So similar to vendors, maybe our customer hasn't paid us and we want to set up a note and a to-do. So I'm going to set up a new note. Jordy said he'd pay at the end of the Packer season. So what I'm going to do is I'm going to set up a new to-do, and I'm going to guesstimate that that time is going to be in January, say the end of January. Click OK. And I'm going to say, did Jordy pay? So my reminders will tell me when to double check on that note. I talked a little bit about credit memos, but here's where I can edit or add a credit memo. Refunds and credits. So let's say Christy, I gave her credit for a door that was damaged. Maybe it got drop shipped to her place and it was damaged, so I'm going to give her credit for a $100 door. Here's where I would do that. And what it's going to do is it's going to decrease her accounts receivable by $100. I can retain it as an available credit, which means I can use it in the future. I can give her a refund, or I can apply it right to an invoice. Well, I know she wants it applied to her invoice, so I can click there. Click OK, and it asks me which invoice I'm going to apply it to. If I'm going to do that and give her a refund, I can do that also. And what giving her a refund will do is it will make up a check to be printed. So it says to be printed. I'm going to send her a check for $107.75. Click OK. And now if I go into my print checks, here's the check for Christy to issue her that refund. Another thing I can do is create a sales receipt. And what a sales receipt is if you've got a business that maybe you keep inventory or you don't keep track of your customers. I use these for convenience store gas stations. get a Z-tape at the end of the day off my cash register because I don't keep track of all my different customers that come in, I can set up a sales receipt for all my sales for the day. Or if I've got somebody coming in, say like a Shopko store, I don't keep track of my customers, each customer that comes into Shopko. So I can set up, okay, my customer came in and they brought some brass hinges. I don't have to have a customer job name. They brought 3 hinges at $5.75 a piece, and I can print out the receipt. They give me their money, say they wrote me a check number, say it's a check, and I can just save and print them the receipt. So print, I'll preview the sales receipt. And I can give them this as a receipt. And again, under formatting, I do have the option to customize that receipt. So I'm going to save that. And what that does is it's going to put this money into an account called opening balance equity. Because I don't have an invoice, I'm just doing a sales receipt, I get that money right on the spot. And what I'm going to do is I'm going to take that, and QuickBooks is going to put that money into undeposited funds. What undeposited funds is like a bank bag is what I kind of consider it, or a bank envelope. When you get your checks in the mail, you don't run to the bank after each one check that you get. You normally store them up, and at the end of the day, or at the, maybe you go to the bank once a week or every other day to deposit those checks and that money. When you're using undeposited funds with your sales receipts, that's another check that goes into that bank bag. Well, let's say now I'm following my navigation window and I created some invoices before. Now I'm going to receive payments. When I receive payments, again, those dollars go into that undeposited fund account. So let's say Jordy Nelson paid me. Let's say he only paid me a portion of the bill. I can change my payment amount, and QuickBooks is going to keep the additional amount underpaid in my accounts receivable. And let's say he paid with that check number. And QuickBooks wants to know if I want to leave this as an underpayment or write off the extra amount. I'm just going to leave it. I'm going to go save and new. And let's say Christy came in and gave me some cash. And let's say she said, okay, I'll pay you $6,000 in cash if you write off the balance of my account. I say, okay. So in this case, I've got cash, $195.63. I'm going to write off that amount. When I go to write off the amount, when I save this, it's going to say, okay, what account do I want that to post to? Well, I'm going to go to my discount account because I'm giving her a discount for payment on time and in cash. Click OK. And now that also posts to undeposited funds. If you've got different accounts that you deposit your money into, you can set that so it does not automatically go into undeposited funds. Take a quick peek at undeposited funds in a minute. And undeposited funds, here's my $6,000 from Christy and my $150 from Jordy Nelson, and here's my sales receipt. Well, if I want that to go directly into my checking account and not hit undeposited funds first, I can do that by setting a preference. Oops, hit the wrong button. Edit preferences. And in my payment preferences under company, here's where I can say do not use undeposited funds as a default. And then I can pick and choose the account to use. So just know that that is available. If you've got credits available when you're receiving payments, let's see, I've paid everything for Christy now. I don't have any credits available, but if I did have a credit available, it would show up in this middle area. and I could apply it then. One of the new features in QuickBooks 2017 is it now gives you this little reminder, this little red dot that says I now have 5 deposits to hit the bank. So when I go to record my deposits, here are those 5 checks and that cash that is sitting in my deposit envelope. I'm going to deposit all of these items into the bank, and what QuickBooks is going to do is it's going to group those all into one deposit. So when I deposit them, it's going, and making this deposit, all these different customers are going to go into my check register as one deposit. If I am taking cash, maybe I'm going to take $100 out of that and I'm going to restock my petty cash account. I can say cash goes back to petty cash as $100. And then my actual deposit is going to be the $85.08. That $100 is going to go into petty cash. Maybe I got my annual workers' comp rebate. So if I've got a check for something that I did not invoice a customer for, I can also record that in this Make Deposits window. So let's say I received it from my insurance company, and that's not a customer, that's actually a vendor. Find my insurance company. I think I have an insurance company. Oh, let's just pick one. And that's going to offset my insurance expense. As a workers' comp rebate. Oops. And if I want to put in the check number, I can. Check. I'm keeping track of classes, and let's say I got a $1,000 rebate. So then this is going to equal my deposit. And I can just save that. QuickBooks will create statements and assess finance charges also. So one thing to do if you are going to create statements, this is statement charges, which means you can just go in and create statements. So I see this, I see people using this if they're maybe have renters. They create statement charges versus sending an invoice. Maybe in a plowing business, you get a bill, you're billed once a month for $100. That's your monthly plowing bill. Something like that where it's going to be the same every month or whatever it is, you can do it by customer and do a statement charge. Finance charges is if you want to assess finance charges. You have to make sure that you know the rules of the laws of your state, because in Wisconsin the max you can charge is 18%. But here's where you can set your settings for your finance charges. And what that does is it brings you right to the preferences. And let's say we're in Wisconsin, I can charge 18% annually. If there's a minimum, I'm just going to say no. If you allow a grace period, where that income is going to go, assess finance charges on overdue finance charges. You cannot do that in the state of Wisconsin. I am not sure about the state of Minnesota, if there's anybody from Minnesota on this call. If you're calculating charges from invoice date or due date, and then you can mark the finance charge invoices as to be printed. And then for my finance charges, right now I don't have anybody that meets the criteria to assess finance charges. If I move my assessment date out into the future, then it says, okay, Jordy Nelson owes me money, and I can assess finance charges by clicking the assess charges. And again, here it allows me to, I can override the finance charges. Maybe I don't want to charge them $7.09, I want to charge them $5. And if I want to mark that invoice to be printed, and then I can send a statement with just this finance charge. I'm going to leave it at $7.09, the calculated rate. mark it to be printed, and assess the charge. Then I can print a statement. We'll go a couple months in the future, and I'm going to assess it for one customer because I know Jordy Nelson should get a statement, and I can preview that statement. So here it gives me the statement. My financial charge, I must choose the wrong date. Oh, here we go. This is why. And my finance charge now prints on that statement, along with additional history. If I want, I could print open transactions. There's a lot of different options when you're printing statements. So what I'd suggest doing is, first of all, do not create statements with a zero balance because you're just killing trees that way. But what I suggest doing is playing around with the different options to get your statement the way you want it to look. And again, right from this window, I can assess finance charges. I can have different sort criteria for my select customers. I can email those statements. And again, I can customize the statements. If I've got a lot of jobs, I can create one statement per customer or per job. So that's just a little bit about doing statements. So now we kind of looked at our banking before. We'll continue into banking. And we'll look at writing a check. And this is on slide number 40. And writing a check, it looks like a check and it acts like a check. So to write a check, you just pretty much pay to the order of and choose your vendor. Well, right now it knows I've got an open bill for this vendor, but I'm going to write a check and not do a bill payment. You want to be careful if you do that. If you're writing a check for the same bill that's out there, you're duplicating your expenses. So just make sure you know that you're not supposed to be paying that bill versus writing a check. Say I've got a bill for $50 for telephone expense. So I've got expenses and items. Again, most of your expenses are going to be your overhead expenses, and items are going to be things that you sell, services, inventory, other things maybe you don't track as inventory, which are non-inventory parts, things like that. Again, if you're not sure what item type you should be using, get a hold of one of our ProAdvisors. We have, I believe it's around 10 certified ProAdvisors in our firm. So one of us will be able to help you. So I'm just going to save. And what that's going to do, right now I've got it to print later. If I want, I can print it now, in which case I just hit the print button. And it asks me for which check number I'm printing. And I can print it right from this window. Otherwise, I can click print later and print it in a batch. So that's writing checks. We looked at printing checks before. Now we're going to look at check register. In your check register, it looks like a check register and it acts like a check register. If you have multiple checking accounts, one thing you can do is change the account color. So if I go into edit, when I have the register open, I can change my account color. Or maybe if you just want your account color to be prettier, I can change my account color. Let's say my checking account is going to be the salmon colored pink. And if I look at my check register and bring up my savings account, and I want that to be blue. So I can differentiate my account colors. So when I'm writing checks, now when I'm using my regular checking account, you can see I have this salmon colored border on my check. So that way it shows me I'm using my checking account versus my savings account. But your check register is where you can enter things in also. So from my check register, maybe I've got some debit card transactions. I can enter those directly right into this check register. I'm not going to have a check number, so I can just click out of that. Whoever my vendor might have been, say it's my lighting company, and what I paid. And here's the account. Maybe it went to cost of goods sold, maybe it was for supplies, whatever account it might have been for. One thing to note, if you are entering it directly into the check register, you cannot enter inventory items. You can click on the split if you've got different line items that it goes to. So I've got my office supplies, maybe that was $50, and then I have another account for dues of $50. Again, I can assign these to customer jobs. I just can't do anything inventory related through the check register. It'll show it split because I've got more than one account, and then I can enter a memo if I'd like. And just click on record. And that's how I can enter like debit card transactions. If you want, you can do under the edit transaction, you can look for, you can change transactions. Maybe it cleared for the wrong amount. QuickBooks lets you download transactions, and we'll talk about that in a minute. And also in the check register, you can find transactions and delete them or change them or modify them. You want to be real careful about that. This is on slide 42. If you're voiding a check, just make sure you don't void it in the current, a prior year check in the current year, because what that does is it will screw up your retained earnings account. And what that does is it makes your accountant do a lot of extra work at the end of the year when we're doing your tax return, which normally will cost you more money. So if you're going to delete or void a check, don't delete or void anything or change anything in a prior period that's already been closed, that your tax return has already been prepared. If you need to void a check, say, let's find something in a prior year. Okay, so let's see. Express delivery service. Let's say this check never got cashed for $35. Well, I can see it has because it says clears, but we're going to pretend it hasn't. When I go to void that, it's going to void it, and it should give me a warning that it's not a good idea. So in this case, I'm not going to do it because it is a prior year. What I'm going to do is it's check 95, and I can see where it posted. It went to freight and delivery. Well, instead, I want to get rid of that check. And if it hasn't cleared the bank, what I can do is a deposit for freight and delivery. In my memo, I'm going to put void check number 95, and then whatever the amount was. And then when you're reconciling your checking account, you can offset that check against this deposit. And you're going to do this deposit in the current year so you don't goof up your prior year. Okay. Another thing in the banking area is reconcile. You always want to reconcile your account. That way you can make sure that you are tracking all of your ins and outs and not missing anything. So when you reconcile, you want to put in your ending balance. And that's from your bank statement. Always verify that your beginning balance matches your bank statement. If it doesn't, what happens is sometimes those clear transactions might get deleted or changed, or sometimes when you're in the check register, you can actually clear a check right in the check register. I don't suggest doing this by clicking on this column, and it'll put a check mark in there. So don't do that. But it's just one way that can throw off your beginning balance. And QuickBooks knows if it does get thrown off, you can click on the button to locate discrepancies and find out why. QuickBooks will track that for you. If you've got a service charge, you can enter that. Say I get a $5 service charge every month. You're going to tell QuickBooks put that under my bank service charge expense. If you want to classify that, you can. Then I'm going to continue. And what QuickBooks does is it lists all your checks and payments on one side of the screen and all your deposits on the other side. If you do have a lot of activity in your account, you might want to hide the transactions after the statement date. So if my statement date is 11/30, anything that might have happened in December will not show on this window. So I'm just going to uncheck that. And then the object of the game is to win the game and get my difference on the lower right-hand corner to 0. So everything that cleared the bank, I'm going to check off. And I want my difference to be 0. Once it's 0, you won the game. If it's not 0, what you can do is you can figure out, okay, where is my difference? Your bank statement will always have your checks subtotaled and your deposits subtotaled. So you can always compare on the left-hand side which items you're missing. So if I know my deposits match the bank statement, I know my difference is somewhere in my checks. So maybe I forgot to enter a check. Well, I can go right into banking and write a check. Maybe it was an ACH or a debit transaction. I can write a check right from here. One thing you do not want to do is look for pennies. If you're off 3 cents or even under $1, don't spend your time looking for it. I always click modify and adjust the service charge. Your time is worth more than those couple of pennies, and the IRS is not going to come down hard on you if you're $1 off. Like I said, your time is more valuable than that. Under Reconcile Now, if I do have a difference, again, QuickBooks will let me enter an adjustment, but you don't want to do that. Because what it's going to do is it's going to put that adjustment into that opening balance equity account. And again, you don't want balances in that account. So I can either return to Reconcile, or if I want to leave, I can leave, and QuickBooks will save everything that I've got checked off so far. They have to leave for an appointment, and I'm going to come back later and finish reconciling and then figure out what my difference is. A couple other things I want to talk about that aren't in this banking field. Actually, let me talk about one more thing before I get there, getting ahead of myself. Enter credit card charges. If you have a company credit card, you can set up your chart of accounts and you can see I have a specific type for a credit card account. If you have a company credit card, what QuickBooks will do is you can enter your transactions from that credit card. And that way you can make sure you're getting all of your transactions in the system. So you're not missing out any expenses. So let's say City of Middlefield, I charged my property taxes of $550. A lot of people just enter bills for the credit card transactions, but when you do that, you're not tracking what you're spending per vendor. So here's one way to do that, is by putting your purchased from. If you've got maybe a lot of meals and entertainment expense, you might not want to put in all of those vendors, in which case you can leave the purchase from blank. If you have a refund or credit, maybe you return something, you can just toggle to the other radio button for refund and credit, and that'll put that in as a negative charge. Again, you can use items. So if you're charging inventory items, you can enter that into the credit card purchases and charges. And again, you can have different colors. You can see I've got the blue outline, but if you've got several different credit card accounts, by going into the credit card register, I can just look at my chart of accounts. And right now I have 2 separate credit cards set up. From that register, I can edit the color. And you'll notice that when you're entering credit card charges, which credit card you're working with by the outline around the credit card charge. So similar to entering bills, you can enter credit card charges. With credit cards, you also want to reconcile your credit card just like you do your banking account. When you reconcile your credit card, once you've got it reconciled, I'm just going to say reconcile now. It's going to ask me if I want to write a check for payment now, if I want to pay the balance in full, or if I want to enter a bill for payment later. If I enter a bill for payment later, it's going to bring me into the bill pay screen, or the enter bill screen, and it's going to pre-fill the account. It's going to say, congratulations, I've reconciled my account. I always suggest printing off a detail report. And it's going to say who I want to write the bill out to. I'm just going to say QuickBooks MasterCard in this case. And it's going to enter a bill in my system. And then if I want, I can pay a portion of that bill when I go into the bill pay window. So that's a pretty slick feature. As I was talking about, a couple items that are not in this banking area on the navigation window is transferring funds. If you've got several checking accounts or banking accounts, I can transfer funds right from this window. Say I'm going to transfer funds from my savings account to my checking account, and then the amount I want to transfer. What QuickBooks will then do is it does the automatic transaction in the accounts behind the scenes. If you're using online banking in QuickBooks, you can online transfer, but QuickBooks will do, if you're maybe just going to your bank's website and doing the transfer, this is one way to record it in QuickBooks and save it. Another thing under the banking menu are bank feeds. And QuickBooks will feed in information from your bank, depending on the financial institution, for your credit cards, for your checking account. If you have a lot of ACH transactions or a lot of credit card transactions, QuickBooks can feed that information right from those websites into QuickBooks. It's not going to let me set this up because I am working with the sample company file right now, but I can look at my bank feed center. It does have some information because this is a sample company, but what QuickBooks will let me do, if I've got the bank account set up, it will download the transaction by updating. It'll give me my transaction list, what I've got outstanding that I need to add to QuickBooks, and I can assign it the account through this window. So it's a really nice feature if you do have a lot of online banking transactions or ACHs, debit card transactions, or credit card transactions. It's an easy way to get that information into QuickBooks. And I promise you we talk about sales tax, and we're looking at slide 46 right now. And talking about sales tax, so for those of you on the phone that have counties that charge sales tax, which in the state of Wisconsin most counties do, there are a select few that do not, QuickBooks does a really nice job of separating your counties. So now what I'm going to do is I'm going to set up some items for my item list. And as you can see in my item list, I have a couple different items. I've got sales tax items and I've got a sales tax grouping. I'm going to add a new item, and it's going to be a sales tax item, and I'm going to say Wisconsin because my sample company is based in California. 5%, and that's my Wisconsin sales tax. I'm going to pay it to the Wisconsin Department of Revenue. And then I'm going to go next. And I know Door County has a separate sales tax of 0.5%. It's paid to the Wisconsin Department of Revenue. And starting January 1st of 2018, Brown County will now have an additional sales tax of 0.5% paid to the Wisconsin Department of Revenue. So I want to keep my Brown County, my 0.5% separate because when I do my sales tax return, I need to list those separately. So what I'm going to do now is I'm going to set up a new sales tax grouping, sales tax group, and I'm going to say Brown plus Wisconsin. And I'm going to bring up my tax items for Wisconsin and Brown, and it's going to give me a group rate of 5.5%. And I'm going to do the same for Door County. Another group rate of 5.5%. Then what I'm going to do is I am going to turn off, I'm going to inactivate my sales tax items that are at the 0.5% so I don't accidentally use those. So I'm just going to right click on those items and make them inactive. It's going to say, are you sure? Yep. Same with Door County. So then it's not going to show on my list. I'm just going to see the groupings on my list. So I'm going to go through and I'm going to do some transactions now. I'm just going to do a couple fake invoices for Jordy Nelson. So I can put some, I'm going to change the sales tax item to Brown. Maybe I'll do one for Door County because I know he's building a cabin in Door County. All the items are going right there. So I am going to do an invoice that's going to be charged Door County sales tax because if the items are going directly to Door County, I should be charging tax up there. So it says I've changed the sales tax item to Door County. Do I want to have that information appear next time? I can choose yes or no. If I choose yes, it's going to change his customer information that he's always charged Door County. Or I can say no, and I can pick and choose as I go along. So that's how you set up sales tax items and groups. So since we've set up a couple invoices now, when I go to manage sales tax, I can run a sales tax liability report and find out what I have in my different counties. And I'm going to just say I'm running this for December. I get my days right. So now I have, you can see I've got several different counties. So Wisconsin, I've got Brown County, I've got Door County, and I've got my Wisconsin. So QuickBooks is going to know how much I've collected and how much I need to pay for each county based on my individual county and my sales tax groupings. It's going to be able to separate that for me. So that's my sales tax liability report. It's a really great report when you are filling out your sales tax return, especially if you do work with multiple counties. So that's my sales tax liability. From here, I can also pay my sales tax. So if I change my date range to 12/31 of 21, let's say I've gone online and made my sales tax payment for the Wisconsin Department of Revenue, And in Wisconsin, we get a $10 credit if we pay on time, or it's a percentage if your sales tax is over a certain dollar amount. But right now I'm just going to adjust this. I'm going to pay this on time, so I get a $10 credit. So I'm going to adjust my Wisconsin sales tax. It's going to be other income to me, and I'm going to reduce that sales tax by $10. Or maybe you have use tax that you need to pay. If you have use tax, you can increase your sales tax by your use tax amount. So now it's going to reset my amounts for my Wisconsin Department of Revenue. And now I should have another item for a minus $10, and it's going to know this is the amount I paid online. And I can say, okay, put in EFT because I have to pay this online through the Wisconsin My Tax account, and click OK, and it's going to post that to my check register. So it sets up, it makes it real easy to do sales tax if you're using the sales tax correctly in QuickBooks under the Manage Sales Tax and have your sales taxes set up as groups. Slide number 48 talks about setting up a new item for bad debts for writing off sales tax, or I'm sorry, for writing off bad debts. Let's just look at my accounts receivable real quickly. And I don't think I have anybody old, but let's just find a Robson Clinic. Okay, so let's say I'm going to write off an amount as a bad debt. So what I can do is I can go into refunds and credits. I'm going to set up an item in my item list that's going to be an other charge for a bad debt. And I'm going to post it to my bad debt expense. Right now, my tax code is non-taxable. So you want to be careful what you're writing off. If what you're writing off is a taxable item or not taxable. So when I go to write off a bad debt, find Jordy. Whatever I'm going to write off, I'm just going to say bad debt. So say it's associated with an expense account. Yes, that's okay. And say I'm going to write off $100 or $10. That's going to go into bad debts. You want to be careful if you're writing off items or customers that have been charged sales tax as a bad debt. You're going to want to know what amount is taxable, because the sales tax you've already paid on that initial invoice, you want to be able to recoup. So when you're writing off a bad debt for somebody that's been charged sales tax, you want to make sure that this item is going to be taxable. So it will then recoup your sales tax. And when you're running your sales tax liability, it's going to give you a negative 55 cents for your Brown County sales tax. So make sure that when you're writing off any bad debts, I'm going to retain it as a credit right now, that you make sure you know the original invoice if it was charged sales tax or not. Slide number 49 talks about general journal entries. Under your company menu, here's where you can make your general journal entries. I'm going to hide the list on the bottom of the window, but here's where I can make my journal entries. So at the end of the year, when your accountant gives you your year-end journal entries back, you can come in and enter them through company, make journal entries. If you don't like making journal entries and your accountant is a ProAdvisor, your accountant can actually send those journal entries back to you, because what we'll do is we'll go in through and we can make the journal entries on your QuickBooks backup file that you've given us, and then we can send the journal entries to you, which will give you a file. When you get that file after we've sent you the journal entries, you would just need to go into File, Utilities, Import, General Journal Entries. And that way you don't have to make them, because the majority of my clients hate making journal entries. They're like, oh, can you remote into my computer and do it? Or can you send them to me? And it's like, yep. So just one thing to keep in mind. At Hawkins, we also have the ability to remote into your computer via TeamViewer. So that's another way at your end. It's how I get my clients up to matching their tax return. We talked a little bit about inventory activities, but here's where you're going to find it under the company menu. Otherwise, it's also under the vendor menu, under inventory activities. So now we're looking at slide 52, and just talking about some of the other options that are available in QuickBooks, which are budgeting, and that's under the company menu. You can create budgets, set up budgets based on prior years, create a new budget. When you create a new budget, you tell it which kind of budget. You can do it on the balance sheet or the profit and loss, which year. If you want to do it by class, you can. And if you want to create the budget from scratch or from a previous year's data. You have memorized transactions, which I talked a little bit about under the memorized transaction list. Anytime you have a transaction that is constantly reoccurring, that's where you can set up a memorized transaction. We talked about to-do lists and reminders. Multiple currencies. QuickBooks does have the option to do multiple currencies. And we've actually used that in our Green Bay office. We have a couple clients that have one of them has a base in Germany, the other one has a base in Denmark. So we've used the multiple currency transaction and it works pretty slick. QuickBooks can also track your vehicle mileage. Under company, enter vehicle mileage. And here's where, if you're using job costing in QuickBooks, you can enter your vehicle and track your odometer and charge it to a job. Payroll and letters. We're going to talk about payroll after our break, but we'll talk about letters real quickly under company. Prepare letters with envelopes. And QuickBooks comes canned with a bunch of different letters. Oh, it's not going to let me do it in the sample company file, but it does have some canned letters that are like collection letters, things like that. So you can play around with that a little bit, and it will integrate with Microsoft Word and Microsoft Excel. So these letters will bring all of your customer information into Word if you're doing collection letters. We'll talk a little bit now about reports. QuickBooks Desktop comes canned with a lot of different reports, and all of these reports can be customized. There's also quick reports. So when you're in a list, my customer list, I can get to a quick report right from here. And a quick report will get me all the information based on that customer. So if I'm in the report menu, a lot of these reports will also give me the same information, but there's a lot of different reports. I've got my profit and loss standard. This is one of my basic reports that normally I need for my accountant at the end of the year. So my profit and loss, one thing that QuickBooks does is you can run these reports based on an accrual basis of accounting or cash basis. And you can toggle between the two by customizing the report. And I want to run this on the cash basis. Running it on the cash basis, if I look at the report for the year, I have income of $61,000. If I look at it based on the accrual basis of accounting, I now have $114,000. You can't switch back and forth when it comes to your taxes. So if you're an accrual basis taxpayer, you need to be running your reports on the accrual basis. But if you're a cash basis taxpayer, I normally will set them up in QuickBooks as accrual, just so they can track their accounts payable and accounts receivable. But then when I go to do the tax return at the end of the year, I can toggle to run my financial reports on the cash basis. So that's a really nice feature in QuickBooks. Another nice feature is I have all these different options. So I want to see my profit and loss this year versus last year, and maybe I want to see the dollar change and the percent change. I can customize my report to show that information. So I can see where I am this year compared to last year. My dollar amount change and my percentage change. Another thing I can do is I can display my columns by different criteria. So I just took off my previous year. Now I want to see the profit and loss by month. Click OK. And here's my profit and loss by month. This is one that I really like to do because then I can look at trends, my income trends. If I look at my total income, I see my income is really high in August and September toward the end of the year. So I can see how my income trends and my expenses trend, things like that. So that's a real nice thing. You can just show columns by month, or if you want to see it by quarter, you can do that also. So there's a lot of different ways you can customize the reports in QuickBooks. Normally, if there's a report you want, the majority of the times we can find a way to get it in QuickBooks. There's a lot of different customizing that can be done. Customers and receivables, your accounts receivable aging. There's a collection history, which will also give you collections report. I don't have anybody outstanding. Let me change my date. There we go. What's outstanding? Let's see. Another nice report is your accounts payable. Some other reports that are canned in QuickBooks also are some graphs. I can see my profit and loss graph by account, by customer, by class, if you're using those type of things. And then if you double click on the pie chart, if I want to see who's in or what's in my insurance expense, I can just double click. They'll say which month my insurance expense is high. Double click, and now I can see my transaction detail for that month. So the graphs are pretty cool if you're a visual person. They're also kind of pretty. So there's a lot of different things you can do with reports in QuickBooks. One other thing I'm going to look at is the job costing report. I'm just going to look at the job profitability summary. And right now, because we've done some jobs for Christy and for Jordy, it's going to give me my actual cost versus my actual revenue and the difference. So this is how much money I've made on these jobs. I'm going to look at the detail report. Let's just say I'm going to look at Jordy Nelson. Here now you can see it lists all my inventory items and my non-inventory items and my services, any other charges, my actual cost versus my actual revenue and my difference. I can also run an estimate versus actual. I'm just going to run a detail for Jordy Nelson because I know I have an estimate for him. So here's my estimated cost, my actual cost, my difference, my estimated revenue, my actual revenue, and the difference. So there's a lot of really good job costing reports here. Inventory reports, you can get an inventory evaluation summary, which will give you all of your inventories. You can also run under inventory a physical inventory worksheet. So you can go take a physical inventory. So there's a lot of great reports. So with that, let's take about a 10-minute break. And if you've got any questions, I believe you're able to type them in, and I can try to answer back during the break or after class. But then we'll come back at, say, 11:03, and then we'll talk about payroll. So enjoy your break. I'm going to put you on hold, and we can come back, and we'll go on payroll next.
Thank you for holding. Your call is important to us and we'll be right with you. Customer service is extremely important to us. If we can be a better service to you in any way, be sure to let us know. Your satisfaction is our utmost priority. We'll return to your call as soon as possible.
Thank you for your call. Your satisfaction is our guarantee, and quality is our way of life. We're proud of our reputation, and we're looking forward to assisting you in just a moment. Please stay on the line. Thank you for holding.
We appreciate your patience while on hold, and we know your time is valuable. Your call is important to us. We'll have a representative available to assist you in just a moment, so please stay on the line. We're looking forward to helping you.
We would like to take this moment to say thank you for your business and your patronage. We've worked hard to build our customer relationships and pledge to continue our tradition of excellence. Customer service is our #1 priority.
Thank you for holding. Your call is important to us and we'll be right with you. Customer service is extremely important to us. If we can be a better service to you in any way, be sure to let us know. Your satisfaction is our utmost priority. We'll return to your call as soon as possible.
Thank you for your call. Your satisfaction is our guarantee, and quality is our way of life. We're proud of our reputation, and we're looking forward to assisting you in just a moment. Please stay on the line. Thank you for holding.
We appreciate your patience while on hold, and we know your time is valuable. Your call is important to us. We'll have a representative available to assist you in just a moment, so please stay on the line. We're looking forward to helping you.
We would like to take this moment to say thank you for your business and your patronage. We've worked hard to build our customer relationships and pledge to continue our tradition of excellence. Customer service is our #1 priority.
Thank you for holding. Your call is important to us and we'll be right with you. Customer service is extremely important to us. If we can be a better service to you in any way, be sure to let us know. Your satisfaction is our utmost priority. We'll return to your call as soon as possible.
Thank you for your call. Your satisfaction is our guarantee, and quality is our way of life. We're proud of our reputation, and we're looking forward to assisting you in just a moment. Please stay on the line. Thank you for holding.
We appreciate your patience while on hold, and we know your time is valuable. Your call is important to us. We'll have a representative available to assist you in just a moment, so please stay on the line. We're looking forward to helping you.
We would like to take this moment to say thank you for your business and your patronage. We've worked hard to build our customer relationships and pledge to continue our tradition of excellence. Customer service is our #1 priority.
Thank you for holding. Your call is important to us and we'll be right with you. Customer service is extremely important to us. If we can be a better service to you in any way, be sure to let us know. Your satisfaction is our utmost priority. We'll return to your call as soon as possible.
Thank you for your call. Your satisfaction is our guarantee, and quality is our way of life. We are proud of our reputation, and we're looking forward to assisting you in just a moment. Please stay on the line. Thank you for holding.
We appreciate your patience while on hold, and we know your time is valuable. Your call is important to us. We'll have a representative available to assist you in just a moment, so please stay on the line. We're looking forward to helping you.
We would like to take this moment to say thank you for your business and your patronage. We've worked hard to build our customer relationships and pledge to continue our tradition of excellence. Customer service is our #1 priority.
Thank you for holding. Your call is important to us, and we'll be right with you. Customer service is extremely important to us. If we can be of better service to you in any way, be sure to let us know. Your satisfaction is our utmost priority. We'll return to your call as soon as possible.
Thank you for your call. Your satisfaction is our guarantee, and quality is our way of life. We are proud of our reputation, and we're looking forward to assisting you in just a moment. Please stay on the line. Thank you for holding.
We appreciate your patience while on hold, and we know your time is valuable. Your call is important to us. We'll have a representative available to assist you in just a moment, so please stay on the line. We're looking forward to helping you.
We would like to take this moment to say thank you for your business and your patronage. We've worked hard to build our customer relationships and pledge to continue our tradition of excellence. Customer service is our #1 priority.
Thank you for holding. Your call is important to us, and we'll be right with you. Customer service is extremely important to us. If we can be of better service to you in any way, be sure to let us know. Your satisfaction is our utmost priority. We'll return to your call as soon as possible.
Thank you for your call. Your satisfaction is our guarantee, and quality is our way of life. We are proud of our reputation, and we're looking forward to assisting you in just a moment. Please stay on the line. Thank you for holding.
We appreciate your patience while on hold, and we know your time is valuable. Your call is important to us. We'll have a representative available to assist you in just a moment, so please stay on the line. We're looking forward to helping you.
We would like to take this moment to say thank you for your business and your patronage. We've worked hard to build our customer relationships and pledge to continue our tradition of excellence. Customer service is our #1 priority.
Thank you for holding. Your call is important to us, and we'll be right with you. Customer service is extremely important to us. If we can be of better service to you in any way, be sure to let us know. Your satisfaction is our utmost priority. We'll return to your call as soon as possible.
Thank you for your call. Your satisfaction is our guarantee, and quality is our way of life. We are proud of our reputation, and we're looking forward to assisting you in just a moment.
Okay, so we're going to start back up. I hope you can all see my screen. I'm thinking I'm showing the right screen here. So we're going to get started with the payroll portion of the seminar. And I'm going to cover a lot of different rules and regulations, things that you're going to need to know if you are preparing payroll. And then we'll get into the QuickBooks portion of it also. So with payroll, we do have a key fact sheet that we put out every year, and you'll find this on our Hawkins Ash CPA's website with the different limits. We do have several of them already for 2018, but just wanted to show you that in 2017, or I'm sorry, for 2018, our limit is out for Social Security, and it's going to be $128,700. This one changes annually, so just keep that in mind. Your Medicare doesn't have a limit. Unemployment rate is 0.6% on the first $7,000 of employee wages. Your Wisconsin unemployment rate or Minnesota employment rate are assigned per the unemployment company, or Minnesota Unemployment or Wisconsin Department of Workforce Development. Your federal minimum wages. If your state minimum wage is higher than federal, you have to abide by the state. Your IRS mileage rates. These are the standard mileage rates for reimbursement. And then you've got your 401k, simple limits, all your different limitations. And by normally mid-December, we normally have all of these new rates out on our website. So that's something you might want to print out. We do have a year-end webinar coming up on December 7th. Hopefully we'll have all these done by then. Prior to processing your first payroll in 2018, for Wisconsin unemployment, make sure that you have your state unemployment rate in the system, in your QuickBooks system, and you can actually enter that rate now. The letters have gone out for your voluntary contribution, which you can calculate on the Wisconsin Department or the Department of Workforce Development's website. But change your rate in QuickBooks now. I'm going to pop over to QuickBooks real quickly, and I'll show you how to do that. If I can find the right screen. It doesn't look like it's going to want me to. Okay, here we go. Okay, I'll change screens. And under your payroll item list in QuickBooks, for your Wisconsin Department of Revenue, or in this case, my California unemployment, not Department of Revenue, Wisconsin unemployment, here's where you can switch over, click next, and now it gives me for the next year, here's where I can put in my new unemployment rate. So you can do that right now. You should have your letters, not positive for when Minnesota sends out those letters. Now I'll toggle back to my other screen. So you want to enter that unemployment rate. Any changes that you're going to be having for health insurance, if you've got HSAs, any type of retirement benefits, if you're adding insurances, deleting insurances, just make sure that anything prior to the first payroll you've got set up correctly in QuickBooks. If there's any employees that claim exempt from withholding taxes on the W-4 form, they need to complete a new W-4 by January 31st of each year. And if they don't, what they need to do is the employer, you have to withhold single zero. And if it's for the state of Wisconsin, you need to fill out a new W-T4 by April 30th. Let me see if I can find out when Minnesota's is. For Minnesota, it's April 30th. Also, you need to fill out a W-4 Minnesota by April 30th. So if there's any new benefits that need to be added to QuickBooks, make sure you know the taxability of those. And when you're doing your first payroll, manually calculate your FICA, FUTA, and SUTA taxes to make sure that QuickBooks is keeping track of those and calculating them properly. One thing you need to know is the difference between an employee and an independent contractor. There's a lot of different rules and tests. If you are paying somebody as an employee, they should be having withholding taxes. And as the employer, you need to match the Social Security and Medicare, and also you need to pay unemployment for federal and state on that employee. You might actually offer them benefits like vacation, personal time off, health insurance, retirement plans. You don't offer those things to independent contractors. Independent contractors, you actually pay on a project. Those independent contractors should be filing their own tax return, either as a Schedule C or a partnership or corporation. They're going to pay their own FICA taxes and Medicare taxes on their personal tax return or on their business tax return. Just make sure you do know the difference between them. I know a lot of people try to skirt around the system and say that the employees an independent contractor because the company does not want to pay the withholding taxes that they have to match and doesn't want to pay benefits and things like that. But if you get caught paying somebody as an independent contractor that should be an employee, what's going to happen is you're going to wind up with a bunch of penalties. You're going to have to go back, amend your your 941 forms, your payroll forms. You're going to get late payment penalties. You're going to get failure to file proper documents, all kinds of penalties, and it's going to cost you a lot more money if you get caught after the fact. So just make sure you are classifying them correctly. An employee, you need to have some forms on file. For federal form W-4, list how many allowances they want. Wisconsin W-T-4, and the W-T-4 must be submitted to Wisconsin Department of Revenue. For Minnesota, it's the W-4 Minnesota form. I-9, make sure you are using the correct form. This form has been updated as of July 7th, 2017. So for any new hires after that date, you should have a new I-9 on file for them. And if you are doing direct deposit, you should have a direct deposit authorization from your employee. The employer will remit your FICA tax, which is the match for the employee, for the FICA and Social Security. And for the employee, when they fill out their individual tax return, that's when they know if you're withholding enough, if they maybe need to amend their W-4 form. If they've got to pay in a lot of tax at the end of each year, they might want to fill out a new W-4. I do have links to the forms at the end of the manual. So any of these forms that you need are linked. I have the websites listed. An independent contractor, prior to even paying the independent contractor, you should have them complete a Form W-9. And what that does is it says, okay, here's your independent contractor form. I want your name. I want your federal ID number. I want to know how you file your tax return. So you should have that on file for all of your independent contractors. I would also request a copy of a certificate of insurance for workers' comp and general liability. If you don't have those and do have employees, when you have your workers' comp audit at the end of the year, they normally ask for these forms. So when you get the W-9 form from those independent contractors, a good thing to keep in mind also is to also ask for that certificate of insurance. If you pay an independent contractor over $600 in a calendar year, you have to issue them a 1099 miscellaneous form. and failure to do so results in penalties. And I do have a link at the end of the manual for what the penalties are. They did increase those a couple years ago, so it's one revenue generator for the IRS, is they're trying to find companies that are not issuing 1099s, because it's, I believe, $50 per form, that if you do not file the 1099 form, you will be fined $50. Or if you file it late, you're going to get penalized for that also. So to determine if you're an independent contractor or an employee, the state of Wisconsin does have a 9-part test. I'm trying to toggle between my handouts for Minnesota and Wisconsin. But if you're in Minnesota and looking at the Minnesota also has a test whether they're independent contractors or not. And these are both on slide 8. With Wisconsin, you have to have a federal ID number. A social security number cannot be substituted for a federal ID number. So if you do have a Wisconsin independent contractor, you want to make sure on that W-9 form that they're filling out that they have a federal ID number. If you've been misclassifying those employees, there is what's called under the IRS Section 530 relief. And what that'll do, I do have a link for this also, is if you've been paying an independent contractor that should have been an employee, they can get relief under this Section 530. And what that means is that you'll still pay in withholding taxes, but you're paying it involuntarily, and they're not going to penalize you as badly as if you were to get caught by them. So keep that in mind. I had a client once that had hired somebody as an independent contractor to put together a computer program for them to write some software. And when he was done writing the software, which they had paid him for, he filed unemployment on them, that he wanted to collect unemployment. And they found him to be an employee, and it cost my client a lot of money to pay him out for the payroll taxes they should have been paying and the other benefits that they should have been paying. And it was cheaper to pay him out than to fight it in court. So it was kind of ugly on their side, and I was a little shocked that they did classify him as an employee, but they went through the different laws and rules and regulations, and they decided they owed him money. So make sure you're classifying them correctly. If you do have a 1099 vendor and that subcontractor makes over $600 in rent, services performed by someone who's not your employee, if you pay somebody over $600 in prizes and awards, so if the value of something you're giving away is over $600, that person would get a 1099. Other income payments, medical and healthcare payments, there's some other miscellaneous ones. Payments to an attorney is another big one. So any of these should get a 1099 as long as they are not incorporated. If a company is incorporated as an S Corp or C Corp, they do not need to get a 1099, but you should send them a W-9 form just to make sure, because on that form, they will check the box if they're an S Corp or a C Corp. And then you know that they're not incorporated, or that they are incorporated, and you do not have to send them the form. But if they are a single member LLC or a sole proprietor, you would send them the form. The corporation, that rule is null when it comes to attorneys. Even if a law firm or an attorney is incorporated, they still get a 1099 form. So there's a little separation of the rule for attorneys. And you really can't hire an attorney for less than $600. So pretty much any attorney you have, you're going to be paying them over $600 for, so they'd get a 1099. But rent is another big one. So your landlord, you're going to want to send them services performed by somebody who is not your employee. So who's ever, maybe you've contracted out your lawn mowing or your snow plowing, your IT services, human resource services, if you've contracted any of that out, your accountant, that is somebody that is not your employee and you'd want to send them a 1099. Prizes and awards, if you're at a church picnic and maybe you win an ATV, they're going to ask you to fill out a W-9 form, so then at the end of the year they're going to issue you a 1099 for the value of that ATV that you won. I'll show you in QuickBooks in a little bit on how to set up the 1099s in QuickBooks. 1099s are now due on or before January 31st when you're reporting non-employee compensation, or with the state of Wisconsin, they've just changed it for pretty much everything. That has to be done by January 31st. So that is a new rule for Wisconsin. It needs to be on January 31st. When I put this together last month, the Wisconsin Department of Revenue had not issued their new publication yet. So one thing to keep in mind. I'm going to pop over to my screen in QuickBooks now and show you on 1099s how to set those up in QuickBooks. Give me a minute to get my screen switched. Okay, so now you should be seeing my QuickBooks screen. I hope you are. And under Vendors on the top menu bar, Print e-file 1099s, there is a 1099 wizard. And this will walk you through selecting your 1099 vendors, verifying that information, mapping the accounts, reviewing the payments, confirming the entries. And if you want to print the 1099s, they have to be printed on pre-printed forms, or you can e-file them, and QuickBooks will e-file them for you, and there is a charge per form, and I think it's over $2 a form. I'm not 100% sure what their new pricing is, but depending on how many forms you have, it might be easier for you to e-file them, or if you want, you can buy the pre-printed forms. And click Get Started, and it will get you started. And again, when you're setting up your vendors in QuickBooks, here's where you're going to tell them under the tax settings if they're eligible or not, and put in their tax ID number that you get from the 1099 or W-9 form. QuickBooks knows if you pay them under $600 that it will not print a 1099 for them if the amount is under $600. Keep in mind also that 1099s are cash basis. So if you've got a bill for your vendor of $5,000 in your system, but haven't paid that yet, and it's January 31st, and the bill is dated in December, QuickBooks is not going to print a 1099 for that vendor for that $5,000 because you have not paid it yet. It is on a cash basis. Record keeping. Keep all your documentation for 7 years in the event of an audit. We also, on our website, have a retention schedule, it is called, that says depending on what type of document it is, it tells you how many years you should be keeping that. IRS records to keep. Things that you need is your federal ID number, amounts of wage, annuity, pension plan payments, amounts of tips if you're a restaurant, fair market value of any in-kind wages paid. So if you're giving your employees anything as a gift, that's considered a fringe benefit in QuickBooks and needs to be added back onto their W-2s and taxed. So any type of gift at your Christmas party. Last year I won a portable speaker at our Christmas party. It's called an orb. It was pretty cool, but the value of it was $150. So my employer added that to my W-2 and I had to be taxed on it. It was still better than having to buy one, but just keep in mind that that's considered a fringe benefit and needs to be added to your W-2. Information on your employees. Any W-2s that are returned is unavailable. In the state of Wisconsin, Any payroll checks that are not cashed needs to be sent to the state of Wisconsin as unclaimed property, and then they will post that on their website for the prior employees to try to get them their money back. Dates of employment for your employees, period that they were paid absent due to sick or injury, copies of their W-4s, their W-T-4s, their I-9s, tax deposits that you've made to the IRS and to your specific state, copies of your returns, so your quarterly payroll returns you're going to want to keep, and records of your fringe benefits. Things to keep in an employee file is your W-4, your W-T-4, your Minnesota W-4. The state W-T-4 for Wisconsin needs to be sent into the Wisconsin Department of Workforce Development because that's what they use for child support. I'm not sure if Minnesota has the same rule. Form I-9, we recommend putting that in a file separate from your W-4 or W-T-4 or any other employee type of files. Because for your I-9 form, government officials and agencies can come in to make sure that you do have those I-9 forms on file to make sure that your employees are able legally to work in the United States. If you do have a government agency coming in, you only want them to have access to forms that they need. So if your I-9s are in your other employee files, they're going to also have access to the other information in that file. So that's why we suggest keeping the I-9 in a separate file, because if somebody does come in to look at those forms, you can just give them the one file that only has the I-9 forms in them. Things you do not keep in an employee file are your health insurance application, life insurance applications, things like that. Anything that has to do with workers' comp, injuries, medical information, background investigations. Don't keep those in the employee files. Those should be in a separate file, more of an HR file versus an employee file. And never ever do you want to keep insupportable opinions in an employee file, like she's too old for this job. What that is looking for is a lawsuit, because if that information ever gets out and that employee gets fired or something, they will sue you for discrimination. So don't have any insupportable opinions in that file. Depositing federal payroll taxes. Those would be your 941 payments, your state withholding payments. Other taxes would be your federal unemployment and state unemployment taxes. So your 941 payment is the federal withholding, Social Security, and Medicare that's withheld from the employees, along with the matching employer share of Social Security and Medicare. So at the beginning of each calendar year, the IRS has a calculation that figures out the look-back period. And if that look-back period has over $50,000 or less of taxes that you've paid in on your 941, you're going to be a monthly scheduled depositor. If that is more than $50,000, you're a semi-weekly depositor. So that means you have to pay, depending on your pay date, the following week. And here's how the IRS figures your look-back calculation. So this is kind of an old slide, but if I'm looking at the look-back period for my 2018, I'm going to look at my 941 form for the third quarter of 2016, fourth quarter of 2016, and first and second quarters of 2017. I'm going to look at Form 941, line 8, and if the total of those four amounts are over $50,000, I'm going to be a semi-weekly depositor. If they're under $50,000, I am going to be a monthly depositor. back a few years ago, the IRS stopped sending letters to companies saying which deposit schedule they were under, and then all of a sudden these companies started getting all kinds of IRS notices that they weren't paying on time and things like that. Since then, the IRS has, again, started sending letters because they had so many people that weren't calculating their own look back. There are one-day depositors. One-day depositors are if your 941 tax liability is $100,000 or more during a deposit period, you have to submit it by the next banking day. And then you're immediately a semi-weekly depositor for the rest of the calendar year and the following year. The only time I've seen this, the only industry I've seen this in is the legal industry for law firms. They normally pay out at the end of the year pretty much any additional monies that they have. So, but if you do have a bigger company, you might have one of those one-day depositor transactions that you need to keep that in mind. Form 941 is your quarterly form that summarizes your 941 deposits. If your liability for the year is $1,000 or less, you might be able to file a Form 944. Most employers, it's going to be more than that, though. And from that form, that's how the IRS takes the information and decides if you were late paid or if you paid anything short. And again, if you have paid late or paid short, they may issue you a penalty. So Form 941s are due at the last day of the month that follows the end of the quarter. So as of today, your 941 is due for the third quarter because the third quarter ended on 9/30 and it is now 10/31. State withholding taxes. Again, these are withheld from the employee wages. There's a Wisconsin publication and there's also a publication for Minnesota that kind of gives you the withholding tax guide information. Wisconsin requires you to remit your withholding taxes via My Tax Account, and then you file a reconciliation, which is the WT-7, at the end of each year. You will get a letter if your filing requirement changes, and Minnesota requires employers to remit their withholding taxes either semi-weekly or monthly, similar to Wisconsin. And Minnesota is based on the taxes that you've paid during the last 12-month period ending June 30th. So similar to how the IRS calculates your 941 is how Minnesota calculates how often you have to pay. But with Minnesota, it's a total of $10,000, where IRS is $50,000. And you'll find that on slide 21 in your Minnesota handout. If you work in multiple states, you may be required to file that state's withholding. If you have employees that are traveling, you might have salespeople that are traveling and making sales in other states. You may need to be withholding in those states. Every state is different as to their laws, as to if they are debating on how many days you're there or how much you're earning there. So make sure you know which states you're working in and those states' laws. Federal unemployment tax is due on if you paid wages of more than $1,500 in any calendar year, you're going to be subject to FUTA. Pretty much everybody is. State unemployment. Again, this is the Department of Workforce Development in Wisconsin, and the rate is dependent on what type of industry you're in. There is a calculator on the state's website that will calculate if the voluntary contribution would be beneficial to you. If you want to know more about that, you can give us a call. W-2s and W-3s, those are due at the end of the year by January 31st to the employee, and the SSA. I talk a little bit about child support and garnishments, so make sure you know the rules there. You can't withhold more than 50% of disposable earnings for child supports and or garnishments. So make sure you read all of those orders completely. And now we're going to spend the last half hour working on QuickBooks and payroll. So I'm going to switch my screen. And we should now see the QuickBooks screen. And we will go through some of the QuickBooks setup. QuickBooks payroll services, they do have 3 services that they offer. The basic, which all it does is calculate the payroll taxes. Enhanced is going to calculate the payroll taxes and give you information, give you the forms so you can do your own W-2s and you can do your own 941s and year-end forms. And then they have an assisted, which will actually do your payroll taxes and forms for you. There's fees involved with all of those. On slide 32, you're going to see the preference, which we talked about in the first portion of the webinar as to how to change your decimals and minutes. Now we're going to look at the preference under Edit Preferences for payroll and employees. It's how to turn on your payroll, first of all. Payroll and voucher printing. So on my payroll and pay stub and voucher printing, I normally charge or change to the large font size. It's much easier to read those on the pay stubs. And then I'll turn off the Intuit logo because I don't need to see an Intuit logo on my pay stubs. And different things you can turn on and off. If you've got vacation time and sick time that you're tracking, maybe you don't have sick time, but you offer PTO time. You can have QuickBooks calculate your PTO and change it to so it prints as PTO versus sick time. QuickBooks will calculate workers' comp for you. You need to set it up through this area, and it works really good if you're using job costing because it will cost your workers' comp to the jobs. Sick and vacation time, here's where you can set up some defaults. We'll look at sick and vacation time when we get into the employee setup. You can copy earnings details from a previous paycheck, so maybe your employees always get paid the same types of earnings. You can also recall the quantity fields and recall the hours fields on each of your paychecks. And for job costing and classes, you can assign a class for the entire paycheck or for each individual earnings items. Here's where you choose if you want your list of employees to display by first name or last name. If you're using sales reps that are also your employees, here's where you can mark them. If you want the employee social security numbers displayed, I normally will always turn that off. And employee defaults. So your employee defaults, these are things that are going to be associated with the majority of your employees. So if you have a payroll schedule, I'm going to change mine to biweekly. If you've got classes that you're tracking, and under taxes, I'll always set up the state taxes to be the state that I work in. So that's how you set it up as a default. And again, if you're tracking time, we talked a little bit about this in the first part of the seminar, under your preferences, is under the bottom, under time and expenses. Here's where you're going to use time tracking. When you set up payroll, QuickBooks will guide you through an easy step interview. And I'm not going to go through that because it is kind of lengthy, but that walks you through on our slides as to the different setup items that you're going to use. So your company section, your employee section, your taxes, year-to-date payrolls. If you are entering some, if you're starting payroll partway through the year, you're going to want to do year-to-date numbers so you can do the W-2s. And then finishing up. So when you set up QuickBooks for payroll, what we like to see, and it might be easier for you to see also, is to set up some new accounts in your chart of accounts. So when you're setting up QuickBooks, when you use the Easy Step interview, QuickBooks comes and it will set up everything according to payroll liabilities, and in your expenses, payroll expenses. So you only have those two accounts to start with. What we like to do is we like to add additional expense accounts that are sub-accounts for my gross wages, my payroll taxes. If you want to separate your FUTA and SUTA, or you can group everything into payroll taxes. If you have benefits, you can also, in your payroll expenses, put in your employer portion of health insurance or your 3% match to your 401k, whatever it might be. And for your payroll liabilities, we break down your federal withholding, FICA, however you want to break it down. I just find it's easier when I break it down, that if there are issues in the payroll accounts, it's easier to find them when they're broken down. So you would just set up a new sub-account, and then what you can do then is map your payroll items. So if I go into my payroll item list, and I look at my federal withholding, I just double click on it, click next, and make sure it's going to that sub-account for my liability. And you can remap it if it's not going there now, and QuickBooks will move the transactions that happened in the past into that account. So slides 42 and 43 talk about setting up those additional accounts and remapping. Slide 44 talks about the different payroll items. They can be difficult to set up. I'm just going to walk through an easy setup right now for a 401k. I'm going to do the easy setup, and I'm going to do a retirement benefit. And the one thing you want to make sure of is that you have the payroll item set up properly. So I'm going to do a 401k. By doing the easy setup, QuickBooks knows the taxability of these items. So if I want to put in my vendor name and my account number, I can. I can tell QuickBooks that I want it to remind me the Monday after the previous week's liabilities to pay my vendor. I'm just going to pick somebody, say Hawkins Ash handles my 401k. And that's pretty much all I have to do. And it sets up that 401k. Well, what it doesn't do is it just goes into, when I look at it, it goes into payroll liabilities. Well, I want a separate account for my 401k. So I am just going to say, set up a new account, 401k payable. It's going to be a sub-account of my payroll liabilities. And that's where I want it to go. I'm going to click next until I get to the end and finish. Well, as you could tell, when I was clicking next, it was showing me a bunch of different screens. So I'm going to talk about those screens a little bit. Tax tracking type. Here's where you need to be careful. If you're setting up during the easy setup, it's going to know this tax tracking type automatically. Rarely are you ever going to go in and change this tax tracking type if you're done the easy setup. You need to be very careful that you're choosing the correct tax tracking types, because if you are doing it incorrectly, again, that runs into the circumstance of not taxing things right, and then you're filling out your quarterly payroll returns wrong, and you're not paying enough in, maybe you're overpaying. So if you're not sure, get a hold of a QuickBooks certified ProAdvisor, and make sure you do have that payroll set up correct, because it's a lot easier to set it up correctly than to go back and change things. Actually, I just spent an hour and a half on the phone yesterday with a client that wasn't taxing something properly for the 401k, and we were able to go through and fix it, and we were able to fix it in the current period so that they're not going to get penalized. But you do need to be careful. It's easier, like I said, to do it right going forward, because we've also had to go back with other clients and go through and amend 4 quarters worth of 941 forms, state unemployment forms, things like that, and it is time consuming and it gets costly to the company that set it up wrong. So just be careful. Again, it asks you the taxes, and because I set it up through the easy step setup, it knows what it's taxable for. If you want this item based on quantity or based on hours or neither, default rate and limit. Well, if I'm setting up a garnishment, this is one item that I want to be careful of. Garnishments normally are a one-time limit. So let me just set up a new garnishment, and I'm going to set this one up from scratch so you can see all the different screens it's going to ask me. So I'm going to do a custom setup, and it's going to be a deduction, and I'm just going to call it garnishment. And who I pay. Now, you're probably going to have separate garnishments set up for each one, just because they're normally going to go to a different vendor. And I'm going to set up a new payroll liability for my garnishments payable. And there it is. Tax tracking is going to be none. And again, that tax tracking, you're going to want to be careful, because look at all the different tax tracking types, and all these different types have different tax implications and show up differently on your W-2 forms. Click next. Again, I'm not going to touch any of these taxes. Based on quantity or hours, I'm going to select neither. Gross pay or net pay. A lot of garnishments are based on net pay. But again, you want to make sure you're reading those garnishment orders correctly. Click next. Default rate and limits. Normally, I'm going to have a limit, and I'm going to make it a one-time limit. So that's my garnishments. What I'm going to do now is I'm going to go in and look at the employee information. So I'm going to go into my employee center. And right now I've got a few employees set up. Well, I'm just going to set up a new employee. And let's say Clay Matthews is coming to work for us. And Social Security number. And then if you want to fill out the rest of this information, you can. Address information and contact information. Again, you've got emergency contact information, and you can change your phone numbers. Additional information. If you have employees that are billable, maybe like a law firm or an accounting firm, here's where you would put their billing rate levels. And again, you can have custom fields. Payroll information. This is how I'm going to tell QuickBooks he gets paid bi-weekly. If he's in a specific class, I can set up a class for him. Let's say he gets paid $25 an hour, and maybe he's subject to overtime. And maybe he has some additions, deductions, or company contributions. Let's say he has a 401k, and he's going to withhold 10% of his wages for 401k. Depending on what his age is, I can put in the limit for the 401k. And then maybe he's got a garnishment of, let's say, 20%. And the limit, the total amount of the garnishment that we need to collect is $1,500. And when you put the limit in, QuickBooks will stop withholding when it gets to $1,500. If I've got direct deposit set up in QuickBooks, I can put in his account numbers. QuickBooks allows up to 2 accounts for direct deposit. Here's where I can set up my taxes. Again, federal is my W-4 information, state is my W-T-4 or Minnesota W-4 information. And if you are in, say, Ohio, Ohio does have other taxes to set up, so that's where you would use the other tab. If you want to use timesheets to create the paychecks, you can check this box, and all the hours that you enter into the paychecks or into the timesheets will come over into the paychecks. I have sick and vacation that I can set up. And sick and vacation, here is where it will walk you through setting up your sick and vacation time, how often they earn or accrue their sick time or vacation time. Again, with those sample company files that I mentioned at the beginning of the webinar, that's where you might want to go in and play with the sick and vacation time as to how that's calculating. And on slide 51, it does talk a little bit about sick and vacation also. And you can also use the help menu to set up sick and vacation time, because that's the tricky part. So I'm going to say, Clay, we're going to use time data to create the paychecks. And I'm just going to go in now to my home screen and enter time. I can use a weekly timesheet, or I can do an individual activity. The individual activity, I would say, would be used for like an accounting firm or a law firm, where you're going to put in your customer name, or I'm sorry, start with your employee name, your customer that they're working on, what they're doing for that specific customer, a payroll item if they're getting paid hourly, and workers' comp code if that's applicable. You can set a timer, or you can just put in, I spent an hour and a half on that job. Notes, again, you can put in any notes. And again, for invoicing purposes, this information that you're putting in the single time activity or the timesheets will come over into the invoices if you're going to invoice for that. So I'm just going to put in a couple items here. My pay code. The one thing QuickBooks does not do is it does not know that after 40 hours to calculate overtime. So you have to tell the system that. So if you're working on different jobs, you can list them. Different items on it, different jobs you can list. And say he worked that week on a couple different jobs. And now he's in an overtime situation. So what I'm going to do is I'm going to change this. Hang on a sec. So in this week, he's going to hit overtime. And I'm going to change my payroll item to overtime rate. Save and close. So then when I go to pay my employees, I have a payroll schedule set up right now. So in my payroll schedule, I can edit that schedule. And here's where I tell QuickBooks where my next payroll ending date is and the date that should appear on the paychecks. If you accidentally maybe do a bonus run for your employees and you did a scheduled payroll for that instead of after the fact payroll or unscheduled payroll, what you can do is just go into that payroll schedule, because it would have advanced the dates, and just edit that payroll schedule with the dates, the correct dates that it should be. So if I want to run my payroll schedule, I'm going to continue. Actually, let me change my payroll schedule. And I'm going to edit the schedule and go back. Let's see, let's go there and there. So it's going to calculate my payroll, and I think I've got my dates wrong because my information for Clay Matthews did not come over. But here's where I can put in my regular pay and any overtime pay. And you can show hide different columns based on how many different pay types you have. I can open paycheck detail, and it'll allow me to put in customer job information if I want to do it here. It will allow me to look to see how much is being deducted for his 401k and his garnishment. It will let me see how much employer taxes that I'm paying under my company summary. And once I decide my hours look right, I continue. It adds up my total hours. If I'm going to print my paychecks, I can handwrite my paychecks. Or if I'm using direct deposit, I will also have a direct deposit option also. Create my paychecks. And here's where I can print them, or if I'm doing direct deposits, I can print my pay stubs. If you have an employee that is no longer employed by you and is showing up on the scheduled payroll, if they're showing up here but they're terminated, what you can do is you can go into the employee menu, and under employment info, put in a release date. Make sure that you make their last paycheck before entering the release date, because otherwise they're not going to show up for their last paycheck. But by putting in a release date, it will take them off of the list to pay. And then if you want them off of this list, you can right-click on them and make them inactive. So once you've prepared your payroll, QuickBooks also tracks the liabilities. So based on the date of your payroll and managing your payment methods, QuickBooks knows when your payments are due. So when I go into Manage Payment Methods, which is on the bottom of that window, I can schedule my payments and tell QuickBooks my 940 is due quarterly. Now, one other thing on your live QuickBooks that QuickBooks will do is it will have two options above this payee that say e-pay or check. And QuickBooks can e-pay your 940, your 941, and your state withholding payments. It works out really slick. And you have to have the enhanced payroll in order to do that, but it works out just so easy, and then you don't have to go out to the different websites to make those tax payments. Your 941, you're going to schedule that. If your payroll schedule does change at the beginning of each year, maybe it was monthly, now it's going to semi-weekly. Here's where I'm going to change that, is in my payroll schedules. If I want to schedule my benefits for my 401k, my garnishments, and I want them to pop up in that window, I can just schedule those as to telling the system when to remind me to pay it. And it'll show up in this Pay Liabilities window. It will show you with a red mark if anything's overdue. So here's where I can make my 941 payment. If I'm making this via the EFTPS website, I go to View and Pay. And then I can just say I paid it on the EFT website and maybe put in the confirmation number. If I'm paying this via ePay in QuickBooks, this ePay would be lit up, it'll be checked, and then when I go to ePay it, it brings me up another screen where I put in my PIN, my password, my phone number, and my email address for contact information to make that e-payment. You click OK, and then it makes the e-payment, and you get a confirmation. And then you also get an email that says whether it's gone through successfully or not. Slides 65 and 66 are talking about liability adjustments. I'm not going to go through that because you need to be very careful making those, and I would definitely call somebody before you start affecting your accounts. I'm going to talk a little bit about the reports. Under reports, employees and payroll, your payroll summary report is a really great report. Under customized report, if you want to turn off the hours and the rate, you can, but it'll give you your report for that pay period by employee, listing out the rates and the hours. Another great report is under employees and payroll, the employee states taxes detail. I run this for my unemployment, but you can see right now it's showing me all of my state taxes. I just need to change my payroll item. I'm going to scroll down and I'm just going to show my unemployment. And then it gives me my income subject to tax, the wage base, and the amount. So that's a really good one for unemployment, is the state taxes detail. Another report I like to run, or let you at least know they're out there, is summarize payroll data in Excel. There are a lot of really good reports in that, and what that is a pivot table. It might take a few minutes to run because it gathers a lot of information, but it is a pivot table that takes all the information right from QuickBooks and puts it into Excel spreadsheets with different tabs. And again, that's another nice report for state unemployment or federal unemployment. And then there's also more payroll reports in Excel. If you have certified payroll or your tax form worksheets, it'll give you a tax form worksheet for your 941 form. Also available in QuickBooks is your file forms. If you've got the enhanced QuickBooks, you can do your quarterly 941s, you can do your W-2s. And again, these forms, if you manage your payment methods, you can also e-file these directly through QuickBooks. And that works really slick. If you're doing the e-file through QuickBooks, and it's not going to let me do it because I'm in the sample company, for your 941 form and your 940 form, you do have to get a PIN number, and it'll walk you through submitting that to the IRS by going under filing, manage filing methods. You just want to choose that you want to e-file it, and it'll walk you a couple steps through a couple additional windows, and then you can submit the form right through QuickBooks. So I'm just going to look at that window a minute. So when I'm doing my 941 form, once I get through the form, and as you can see, it looks like the actual form, I can submit it. It's not going to let me do it. Let's see, I've got some errors. It doesn't like my number. But under the submit form, it will ask you for that 10-digit PIN once you get that from the IRS. So it does save you some paper, and it works pretty slick by submitting the form. So on that note, I will let you go because our time is up. I just want to let you know I appreciate you coming today and attending our webinar. I'm not sure if you have comment cards or any type of thing to offer us suggestions for future seminars, but our contact information is at the back of your manuals. So if there's anything you want to see or have any comments on the webinars or have any questions, feel free to call myself, Debbie, or Beth, who is out of our La Crosse office, and we'll be happy to answer your questions. And with that note, thank you and have a wonderful Halloween. Bye-bye.